Hello and welcome to Compass Global Markets Weekly Update. I'm Tony Boyajian. We'll kickstart the week by talking about some election news. German Chancellor Angela Merkel has secured a record-equaling fourth term in government, but her CDU party has suffered the worst result in 68 years, with only 33% of the entire vote. And they need to form a coalition government with one of the popular rightist parties in order to form government. We've seen the euro-dollar weaken over the course of the last 48 hours, heading down towards that 118 level against the US dollar in light of the political uncertainty that it's created. Meanwhile, the Kiwi dollar, New Zealand dollar, has fallen by 1.5% overnight after the New Zealand election results revealed the requirement for a coalition government that cannot be formed until the final vote count takes place on the 7th of October. New Zealand dollar remains vulnerable to further downside move, and this provides an opportunity for the Aussie-Kiwi exchange rate to retest the 111 level soon. Continued tensions between North Korea and the US certainly continue to rule. It will ensure that currency markets remain volatile. We've seen safe haven trades become popular again in the last 24 hours, with the yen and the Swiss franc strengthen, and gold has also appreciated by over 1% overnight. Now, in late-breaking news, Japan's Prime Minister Shinzo Abe has announced plans to dissolve the parliament, the Japanese parliament, this Thursday. A snap election will take place on the 22nd of October as he seeks a mandate to get some policy decisions through the parliament. A new economic stimulus package is envisioned around 2 trillion Japanese yen, or 0.3% of GDP, by the end of this year. However, it is unlikely to have a material impact given that Japan's economy is encumbered by a very weak inflation outlook. Elsewhere, US President Donald Trump is expected to release its long-awaited tax reform plans tomorrow and also Thursday this week. There are reports that suggest the US corporate tax rate will be cut from 35% to 20%. However, the tax cut plan over the next decade may only be $1.5 trillion, whereas it was $6.2 trillion pre-Trump's election campaign. The market awaits further details of the forthcoming balance sheet shrinking, the $4.5 trillion US balance sheet shrinkage from its maturing securities program. Now, US tax reform has been delayed several times already this year. There is no guarantee that the Republicans will agree to the president's plan. However, if they do, then we could see a sharp rally, a reversal of fortunes in the US dollar. Now, Fed Chair Janet Yellen will also speak tomorrow about inflation and monetary policy. The market is keen to hear what her comments will be regarding US inflation as it remains stubbornly below that 2% target level. The Fed is forecasting 3 more interest rate hikes in 2018, but don't hold your breath. The Aussie US remains confined in the 78.7 to 80 US cent range this week in the absence of any market leading economic indicators. The Australian dollar has been quite resilient given the fact that iron ore price has fallen by 20% in the past month, but the Aussie dollar is only retraced by 2%. So perhaps the Aussie dollar has further ground to lose. Now that would keep the RBA satisfied, so the pressure is certainly on the downside for the Australian dollar. 78.7 is the next level of support on the downside. Elsewhere, the sterling pound has fallen by 1% after Moody's cut the UK sovereign credit rating by 1 notch. UK Prime Minister Theresa May has offered a 20 billion sterling pound financial settlement to the EU. Now, the sterling pound is likely to remain soft while these Brexit negotiations take place. Don't forget to watch Sky Business News every Thursday lunchtime between 12:15 and 12:30 for our latest markets wrap. Thanks for watching. Have a great week. I'm Tony Boyajian.